A few years ago, institutions were asking whether they should pay attention to blockchain, but today, JP Morgan is issuing debt on blockchain. Citi is settling trade finance on top of blockchain, and BlackRock have nearly 2 billion in tokenized assets. So the question is no longer if, but when, how fast, and how big does this space get? Super excited to be joined by Nick Ducoff today, head of institutional growth at the Solana Foundation. And I guess I'll do a kickoff here. Low hanging fruit. Can you give an intro of yourself, Nick, and tell us a little bit about what you do within the Solana ecosystem?
Sure thing. Thanks for having me. I'm Nick Ducoff. I lead institutional growth at the Solana Foundation. I joined the Solana Foundation in the summer of 2023, so coming on 3 years at the foundation. I was supporting the ecosystem prior to that in my role as a VC, and has been just so thrilling to see the Solana ecosystem grow over that period of time. And especially right now when the broader market is seeing quite a lot of challenging times. The Solana ecosystem is ripping. Stablecoins are at all-time highs, RWA is at all-time highs, daily transaction is at all-time highs, monthly users at all-time highs. I think the data really speaks for itself, and there's still, of course, a lot of wood to chop, and the job is never done. But I think it's a very exciting time to be building in the Solana ecosystem.
Yeah, it's interesting. You mentioned 2023. I remember a handful of years ago, I think it was like 2018 or 2019, the biggest blockchain news, and I brought this up so many times, is like Lipton iced tea rebranded to like Lipton blockchain for like a short period of time there. We've come such a ridiculously far way. I mean, the role of head of institutional growth in and of itself, you probably deal with so much. What does a role like that within an ecosystem like Solana, just in and of itself, tell us about where DLT adoption is actually stands right now, and maybe give some insight into what your day-to-day looks like. I'm sure that's pretty interesting for people that might not be aware.
Sure. So, I mean, grossly oversimplified, it really is kind of two big buckets of activity. One bucket is tokenization. And so kind of within that bucket of tokenization, you've got a lot of different things. You've got real world assets like asset managers are bringing a bunch of products on chain. They're bringing money funds, they're bringing private credit funds, they're bringing real estate funds, they're bringing all sorts of both securities and debt instruments on chain via tokenization. Then you also have banks who are tokenizing different products, both internally. This is like stablecoins, deposit tokens. And then you mentioned something like trade finance, short-term credit from their corporate clients. And then the other bucket is capital formation. And so this would be using tokenization to raise capital, both for SOL, the native asset. Like this is like Solana ETFs. We work very closely with the issuers like Fidelity and Bitwise and the many others who have brought Solana ETF products to market, as well as folks that are using blockchain for tokenization of equities more broadly. This is Superstate, Opening Bell, Ondo Global Markets, Kraken X stocks, and kind of the broader vision that you see that DTCC and NYSE and NASDAQ all have, going all the way back to Tolly's original vision of on-chain NASDAQ. Now we use the phrase internet capital markets, really kind of bringing the global asset pipeline to global investors via a single liquidity venue, that being the Solana blockchain.
So I know you mentioned kind of the state of where the majority of crypto is right now. And for those of us that have been here for, this is like a decade for me, and I know that you've probably been in crypto longer, and there's many people that have been here longer. This does seem like, I mean, you always hear like this time is different type stuff. But this past 12 to 18 months really it seems like there has been an actual shift. I mean, you have like Larry Fink of BlackRock basically saying everything's going to be tokenized. And you mentioned DTCC, so Depository Trust and Clearing Corporation. So basically derivatives. And you have, I'm going to probably mispronounce her name, but Nadine Chakar, I think is how you pronounce it, saying very similar things. I guess the question I have for you is, to start with, when an institution like JP Morgan or BlackRock comes to Solana to look at some sort of integration, where are they kind of at as far as their adoption is concerned right now? And I guess the low-hanging fruit question is it like do we need more clarity for kind of that full adoption? Like what do you kind of envision that they're looking to do kind of mid to long term in this space?
So I'm going to focus on one thing that you said, that it really feels like in the last, 12 to 18 months that things really changed. And I think what changed was the Trump administration. I think that a lot of credit is due to the president to basically take the U.S., which was had somewhat of an antagonistic posture towards tokenization, to having a supportive, permissive posture, which it has now. And I don't think that can really, the importance of that can really be understated, because you really saw folks going from a very small number of large financial institutions doing very sandboxy things to today, those institutions and more moving this into their core kind of business lines. And I think that's really what's happening. And as soon as you go from kind of sandbox R&D to this becoming part of the core business, then everyone in the competitive set has to do the same thing. And so now you're really seeing kind of a race to the top, where all the asset managers, all the banks, frankly, not just in the US, but in the world, are saying, hey, if we're not tokenizing, if we're not figuring out how to future-proof our business on chain, then we're going to get beat by the competition, and that kind of pulls everyone up. And I think that's really what you've seen in the last 12 to 18 months, and I think that's only going to accelerate, because when these institutions at the size and scale that they're at, when they lean in, it doesn't happen overnight, and there's a lot of weight that comes with it. And so I think the real limiting factor now is demand. It's not supply. It was supply 18 months ago. It's now demand. And I think the demand will get solved over the next 18 months, because part of it is infrastructure, part of it is distribution. And I think those are getting solved now. And so we're going to see an even bigger explosion in adoption, towards the later part of next year, if I had to bet.
It's interesting, and just like a note for myself, like, because I if you, I read like the really boring, like I try to like look for PDFs or like banking PDFs and stuff. I've always been like that, and there has totally been this kind of shift, and a lot of the talk for a lot of the previous decade was around future proofing. I saw a clear shift like 18 to 24 months ago, where no longer kind of the sandbox environments as you mentioned, but almost like, I think it was a guy from the Bank of England mentioned, like the operationalization was the word that he used, of the technology, which is like super interesting. I guess the question that I have is like, when you look at like all of the different, I go back to 2020 or 2021, and you could look on to CoinMarketCap and there's 12,000 cryptos, and you go there now and there's 20 million. When you look at that sheer volume of things going on in the space, there's obviously not 20 million institutions and enterprises that are onboarding into this space. What do you feel, I guess, in your opinion, is the competitive advantage of a network like Solana? And how does it fit into kind of that landscape, I guess, for the long term, I guess I would say?
Yeah, so let's kind of take three things that I think are important, that Solana has all three, that I think we're the only chain that has all three. So first is performance, right? Very fast, very cheap, very resilient. I think that's now kind of pretty well understood and agreed that Solana is a very, very resilient, high performance network. That was like a strange thing to have to say even a few years ago, because you had L2s that really were not as highly performant as Solana, and Solana was way out ahead, and the use cases were very sandboxy. And so you had institutions say, well, we don't even need 65,000 TPS or whatever, and we're not doing millions of transactions, so the fact that you're a thousandth of a penny versus a cent doesn't really matter. Well, now those things really matter, because, like I said, these institutions are going from kind of R&D to actually putting this in the business unit, and a thousandth of a cent versus a cent does make a huge difference. 65,000 TPS and going up to 1 million with FireDancer does make a huge difference when you're looking at future-proofing your business. So I think performance matters, and Solana has it. The second thing is decentralization. This is a thing that I think only Solana and Ethereum mainnet have. Literally, there are two blockchains, in my view, that have the type of decentralization that large financial institutions care about. Now, I'm going to caveat that with banks right now don't really have the clarity they need, no pun intended, to operate on public blockchains that are decentralized. And I think that will get solved. I think that will get solved this year, whether that's through OCC rulemaking, whether that's through Clarity Act. But I think we'll get that clarity, and banks will be able to deploy on public blockchains. For asset managers and everyone buying anything on a blockchain, decentralization matters, because you don't want someone that has a single sequencer to roll back a transaction or to trap your money on their blockchain. And that is a real risk with every other blockchain, all the consortium blockchains, all the corporate blockchains, and a blockchain like Canton. That's a real risk. And people don't have that risk on Solana. I think that's why you see larger institutions that do want to be on public blockchains, want to be on Ethereum or Solana. And you see this over and over and over again, where State Street, where BlackRock, et cetera, are on Solana, they're on Ethereum. The third thing, and this is the thing that I think really sets Solana apart, again, probably one of only a very small number of blockchains that has this, is distribution. Solana has 80 to 100 million monthly active wallets. There's 5-6 billion of trading volume a day on Solana, $3 trillion of DEX volume last year, $1 trillion of stablecoin volume last year. Solana has absolute global distribution. And I think that is something that people want. So you got high performance, you've got decentralization, and you've got distribution. And any one of those things I think is great, but having all three of them makes Solana truly unique. And that doesn't mean we've won. There's still a long fight ahead. But I think the conditions are such that it's ours to lose.
So I'm going to go, I could go in a bunch of different directions here, but I'm going to go with, it's been very interesting for me to I'll go with the R3 route here, because I just interviewed Richard Brown, CEO at R3, like a couple of weeks ago. And you can imagine, well, for me, it was definitely a full circle moment, because like I remember deep diving into digital asset holdings, Hyperledger, and R3 like 8 or 9, 10 years ago, whatever. And looking at all the stuff that Corda was doing and everything else, I still don't think that, like, for me, it was even surprising to do that interview and understand the actual vision now. So it tells me how far this space has come, that an entity that has an amazing amount of private network relationships. I mean, you're talking tens of billions and pretty much all the big entities that you think of, to talk about this vision moving into the future of, as you said earlier, kind of internet capital markets and what that looks like in practice. What has that experience been like, I guess, for you to kind of witness, and what are you excited about, I guess, for the kind of rollout of what's about to happen with R3 and Corda and everything else?
I mean, listen, if you work at the Solana Foundation, or if you're building on Solana, you're kind of inherently a public blockchain maxi. Like, we always believed that this was the right future. Now, it was unclear whether that future would be realized. I think it's increasingly clear that the future is public blockchains. And I think people, really smart people like Richard Brown at R3, have come to that conclusion independently. And it's incredibly exciting that, someone, like Richard and David Rudder, his co-founder, and Todd, as well, have come to this conclusion that not only is public blockchain the future, but of the set of public blockchains, Solana is the best positioned to win in that future. And I think there's so many teams like that have gotten there, and it really is a rewarding experience to see talented teams that could build anywhere build on Solana.
So I'm going to ask you a question, because I always try to do a little bit of digging before these interviews, and I caught that in a prior, I don't know if it was an editorial or an interview, but in a prior editorial or interview, you're quoted as saying, you look at, or you've described Solana as the financial everything store. And I thought that was pretty interesting way of describing a network. A lot of, obviously, people out there in retail look at, these networks as a place to trade tokens and do different things, and enterprises are looking at it a certain way. Can you mention, or can you maybe elaborate on your vision of this financial everything store and discuss what you meant by that?
Yeah, for sure. And so I also want to note that the future is here. It's just unevenly distributed, right? Like this is like a classic quote that I think is very true. And I'm going to mention one product in the Solana ecosystem, but I could mention 100 that is proof that the future is here. It's just unevenly distributed. In the context of the financial everything store, is something like Fuse. So Fuse is a mobile application built by Squads. Squads is a multi-sig protocol built on Solana. What Fuse is much more than a wallet, because you can, of course, safely custody your digital assets in a Fuse wallet on Solana. But in addition to that, you can spin up a virtual debit card, that can be paid using stablecoins. You can connect that to a virtual bank account with like a Swift number so that you can receive wires and send wires via this account. You can, kind of do everything you could do with a bank account, essentially in the Fuse wallet. And I know there's others like Avicii that are doing similar things. The Solana ecosystem, obviously Jupiter and Phantom are trying to build super apps on Solana, and I think kind of this idea of having a brokerage account, a bank account, and the ability to buy anything in a single application on Solana, where you self custody and maintain control with very low fees and very fast execution. I think that's very, very powerful. And by the way, this isn't available just to like US persons. This is available to everyone anywhere in the world, the 5 billion people that have an internet connection. And so I really kind of, the way I've been describing it is Solana not only kind of services the unbanked, like Chime and Revolut, but it also services the unbrokeraged. And when you look at the global investor base, who wants to invest in assets, that's everybody. And like, let's just take Pakistan as an example. There are 300,000 people in Pakistan with a brokerage account, but 40 million with a crypto wallet. And I think when you think about that, like 100x number of people that have access to crypto, that have access to stocks, you're seeing in the United States, people under 35 are more likely to have a crypto wallet than a brokerage account. I think that gap only widens over time. Demographics is destiny, and young people want to do everything in one place. They want it to be at the speed of light. They want it to be very cheap. And I think Solana enables all of that. And when you bring the best founders together who are building the best applications and making the best tokens available to those users, I think very good things happen. And that's really what we're trying to do here at Solana.
So I want to ask, and there's probably a lot of different routes I could take it from like an enterprise and institutional adoption stance, but I guess I'll maybe combine a couple of stats and then ask you a broader question. So for those not aware, and this is interesting to me because I like kind of the enterprisey type stuff, Citigroup recently completed a proof of concept on Solana, essentially executing the life cycle of a bill of exchange. So we're talking supply chain and trade finance industry. And then you move over to like JP Morgan arranging, tens of, I think it was $50 million commercial paper issuance on Solana. When you look at all of these enterprise and institutional use cases, which ones like stick out to you as far as where the excitement is? Is it totally different because there's so many different industries and so many different value adds, or which ones are interesting to you as far as the potential for adoption of a technology like blockchain and distributed ledger?
I mean, there's so many, but the ones you mentioned, obviously, commercial paper, trade finance, FX, which isn't even really happening on chain yet to any large extent, tokenized equities, which we're just scratching the surface, but clearly, I think that all comes on chain. Payments, remittances, corporate treasury, on chain, cash management. All these things are clearly headed in a direction of 24/7 low cost, with global market participants and counterparties. And this is what blockchain really enables, because it's all on the same rail. Like it's inherently interoperable when you're building on Solana, whereas it's not if you're using other blockchains. And I think that's really the vision, is to bring all this activity in the same place, and then you get kind of these compounding benefits to participate in the network. And we're just really starting to see this work. But I think the evidence is increasingly clear that this is the direction of travel, and that Solana is one of the few places where you're seeing kind of organic compounding growth. And the thing that has become clear to me is when you're compounding, it's very hard to actually see it work in the early stages of the J curve because you're on a fairly low base. But I think as you get kind of further up the J curve and towards like the elbow where it goes like kind of hyperbolic, you really see it. And I think you're seeing that. So for example, this time last year, there was maybe like 5-6 billion of stablecoins on Solana. Now we're at like 17. So we've tripled on a base of 5 billion, right? RWA. RWA this time last year was like 170, 180 million. We're at 17 billion. So we're 10xing on a base of a couple hundred million. I think that growth rate is going to continue. Is it possible we're at 20 billion this time last year for RWA? Absolutely. And when that continues to compound, even if the growth rate goes from 10% to 8%, you're at such size and scale that the thing just really begins to take on a life of its own. I think that's where we are. Again, if we continue to execute well and do everything right, and we don't want to take anything for granted, and it's only thanks to the hundreds of millions of users, to the hundreds of thousands of builders who believe in Solana, who have chosen Solana amidst a very competitive environment. We're very grateful for all those people, and I think they'll all be rewarded.
I think you bring up an interesting point. I could go in two different directions. I'll start with, I've found it fascinating to watch that a lot of the enterprise and institutional adoption is on the kind of the heels of the willingness for retail builders to like innovate, and like the grassroots builders to go out there and build things, because a lot of the stuff that the grassroots builders have went out and built is now like being leveraged in a lot of different enterprise and institutional ways. I would imagine, because I've heard this a handful of times, I think one of the pain points historically for this industry has been, it's almost like a race between like how ready enterprise and institutions are versus how ready the technology is versus how big the ecosystems are. One thing I've heard interviewing like some of the kind of like the middleware integrators, like the PwC and Deloitte and these, they're always saying that it's making it a lot easier to deploy solutions because the technology has just gotten better. You can rapidly deploy proof of concepts and then get to a value proposition. I've got to imagine in Solana, with how big the ecosystem is, this being an also benefit, because I think a lot of the times those relationships have like almost individual point of contacts in different ecosystems. Where Solana is such a big network with so many different projects, there's probably a lot of different solutions integrators that can step in and maybe raise their hand and be like, hey, yeah, we fit as far as maybe a relationship in X industry. Is that like a correct assumption that that's kind of a benefit?
So what I heard you say is, or ask maybe is like, is there an economy of scale to the ecosystem? And I think the answer is yes, but I would say kind of in addition to that, I think Solana got a lot right with kind of the design of the protocol with reusable audited programs. So for example, token extensions, which is there's two native token programs on Solana: Token Keg, token extensions. Token Keg was the initial token program at Genesis, and Solana token extensions is the kind of composable update to the tokenization program that has really helped enable RWA at scale, and a variety of other token that have been launched as well. Token extensions are so easy to deploy. You don't need to know Rust. Now with the Solana developer platform that's being built, as well as the Solana security token standard that Halborn recently deployed, it's like bop, 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 click, deploy token, fully audited, right? Because it's using reusing existing audited token program. And that just makes it so easy for enterprises to launch tokens on Solana. Whereas, the earlier folks, even 2 years ago, were having to do things that were much more bespoke, had to get things audited. Whereas like the JPM commercial paper example that you gave was reusing that existing program, was able to use a whitelist, click, 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 deploy, and be executed very, very quickly. And I think in addition to the economies of scale you get with the ecosystem, you get economies of scale you reusing the audited programs on Solana. Whereas with Ethereum, every token you deploy is essentially a bespoke contract that you need to have audited.
Yeah. Yeah. It kind of makes sense, right? If we're planning to streamline all sorts of things globally, you would want to remove redundancy as much as possible. You also mentioned kind of the snowball effect as far as what's happening with tokenization and RWAs. So a stat I found, Solana hit 1.7 billion in tokenized RWAs as of mid-February, as you mentioned. So that actually that doubled from 6 weeks ago. So I looked that up beforehand. I thought that was pretty interesting. The question I kind of have is like, anybody can look out and see these like giant entities, like, Citigroup is a good example because we just talked about Citigroup. And they project all sorts of different things from an RWA tokenization standpoint. You can look in one place and see 3 trillion. You can look in other places and see 20. And that's not even including the discussions around where stablecoins go. But I guess the question I have is, if you look right now, excluding stablecoins, all of crypto, and I'm sure that the number is probably not totally accurate, is probably somewhere around 40 billion tokenized RWAs. How do we get from that to tens of trillions in literally less than by the end of the decade, basically?
Yeah, so I think it goes back to the two gating factors right now are infrastructure and distribution. So let's just talk about them one at a time. Infrastructure. Now, I'm a big fan of Coinbase, Anchorage, and BitGo, but those are currently the 3 qualified custodians in the United States for digital assets. There's folks that have announced that they're coming soon, like BNY and Morgan Stanley and State Street and others. But until you get the folks that are currently custodying like securities today, like the BNYs, not everyone on the institutional investor side is comfortable with Anchorage or BitGo or Coinbase, right? So I think one is opening up the set of places that you can custody tokenized RWA. That's one. 2 then is distribution, and I think 1 is related to 2. On the distribution side, where are these products distributed today? They're distributed today through the wealth channel and to pensions and endowments. And until you've got the infrastructure where the endowments and wealth channel and pensions are willing to, and feel confident holding and trading their tokens, you're not going to have trillions of dollars, right? And so I think you get the infrastructure over the next year with these large GSIBs that have already publicly stated that they're going to be operating in this space, not only for custodians, but for transfer agents and other, critical infrastructure as well. Then all the rest follows. You will have wealth distribution through the wealth channel. You will have pensions and endowments enter the space as well. Because these folks all want the efficiencies that they're going to get. They all want the liquidity that they're going to get. And they're going to want the competitive pricing they're going to get, not only in spreads, but in, borrowing as well. And I think that's like why DTCC and others are coming into the space, is they see that future. They know they have an opportunity to play a role in creating that future. And they know that institutions trust them. And that doesn't mean that we won't have crypto natives that have a big piece of the pie. We will, the Aves, the Caminos, the Morphos, the Loop Scales, the R3s, like you mentioned. I think crypto native organizations have an important role to play, and we'll see tons of growth. But I think that incumbents who are building and bringing a lot of resources behind them will also have a role to play in the future. So it's TradFi and it's DeFi coming together.
So I know you mentioned kind of the utility and efficiencies from kind of the financial institution standpoints, and there's obviously many. And some of the biggest names in the world are obviously already here: BlackRock, Franklin Templeton, Wisdom Tree, Van Eck, et cetera, et cetera. I guess the question I have is like, there's still the vast majority of people in the world aren't getting up and using crypto or using blockchain or DLT every day. This is my personal opinion. I believe that in the future, a lot of what we do as human beings probably runs with blockchain or DLT under the hood. It's just maybe a matter of time until we get there. And I think I use terms all the time that I know that like my wife and other people just have no idea what I'm talking about. So for this is maybe a question for you is for somebody that's never heard of tokenization, what does putting a traditional fund on a blockchain actually change for the people that are participating, or I guess what's the user experience? How's that's going to change for the people that aren't super tech savvy in the future, at least the way you envision it?
Yeah, so let's come back to the Fuse example I gave. So Fuse, because it's built on squads, is multi-sig custody. So, but it's natively built into the application. So instead of like having to like write down your seed phrase, or just like have the risk of your wallet being lost if you know you can no longer access the application, with Fuse, when you create an account, it shards it into 3 keys. One is your email. Two is your device. Three is your thumbprint or face recognition, so your biometrics. And so now all of a sudden you've got a secure crypto wallet that you're not doing anything different than you would normally do, right? And it's got redundancy built into it. Then imagine you're anyone anywhere in the world. You're a CFO or you're an individual investor. Now you can access the universe of products that are on chain. So today, if I want to buy Benji, which is the Franklin Templeton money fund, I have to download the Benji app, be a US person. They have a global Benji product too, but for simplification, you can talk about the US product. You got a KYC and buy it in a separate application. Well, if I'm a US person, I can already access a similar product in my brokerage account. And because I can only access it through the Benji application, that means I can't access it in Fuse unless I whitelist my Fuse wallet, which you can do peer-to-peer transfers with Benji. So I can whitelist my wallet, and then I can buy it on Benji, and then I can transfer it from my Benji application to my Fuse wallet. That's a bunch of steps. And this is from, among the most innovative asset managers, Franklin Templeton, out there. Imagine a future 6 months from now where you can just buy Benji directly from your Fuse wallet, you KYC once, and then you can buy any RWA from any asset manager or issuer. And we have a product called the Solana Attestation Service that hopefully will make it easier for issuers like Franklin Templeton and wallets like Jupiter, like Fuse, like Phantom, to make it easy to, in a single one-stop shop, make all of this RWA accessible to global investors. And I think that's the direction of travel. We're just not there yet. But I think when you get there, the case becomes pretty compelling for why you would want to buy the tokenized version of this stuff, because you have access to this huge menu of assets in a single venue, versus having to have a brokerage account, a bank account, this account. You can have everything in one place. And that comes back to this idea of Solana being the financial everything store.
Yeah, I think the democratization of access, and I always think how interesting it's going to be where we're heading towards a future where, obviously compliantly, but it's not going to matter if somebody has $100 in their account or $10 million in their account. They're probably going to be able to participate in a lot of the same things. And that's going to be really interesting what that opens up. As we ramp down here, I would love to ask you kind of what you're personally excited about moving forward into 2026. If you want to talk about any past milestones, that'd be great too. I mean, if you feel like going that route, I just know that blockchain, crypto, everybody working in it is so, it's what have you done for me tomorrow almost, like this industry. So what are you excited about for tomorrow, I guess?
I'm excited for a point in the near future where institutions say, of course, I'm building on Solana. And I think we're getting there much faster than I might have even thought, where, when I started, it was, what is Solana? Then as folks began educating themselves about Solana, it was, well, Solana has had outages and, it's not EVM and, they have all these objections that you had to overcome. And now it's like, okay, well, Solana and Ethereum, they are both really great choices. Ethereum's much bigger than Solana, but I'm probably going to do both. And I think the future state is I'm just going to deploy first on Solana. It's fastest. It gives me the most distribution. It's highly performant. It's decentralized. I trust it. And I think we're well on our way of that path. But we still have a long way to go, and the job's never done. But I'm more optimistic and excited about the future than I've ever been, and I think the evidence is there to back it up that it's very viable that the future I just painted is going to happen.
Well, I definitely want to mention for those watching, make sure you guys give Nick a follow at Nick Ducoff. Again, head of institutional growth at the Solana Foundation. This has been an interesting one to research, Nick, as well. So I appreciate all the really in depth and kind of hopefully educational for everybody that watches this answers. Please give Genfinity a follow at Genfinity, and you can check out all of the written content that we do as well on genfinity.io. That being said, looking forward to the rest of this year as well. And feel free to come back on. I'm super excited to see some of the enterprise and institutional adoption as it comes to fruition. And Nick, thank you for your time today. Really appreciate it.
Thanks, and hope you can catch me at Blockworks DAS in New York late March, and if not, that you'll come to Miami for Accelerate during Consensus.
We will be in Miami, so I will probably see you there.
Awesome. Looking forward to it.